What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 8th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I not only want to spend some time to talk about Bitcoin and the horizon for when we can start expecting institutional involvement in the cryptocurrency space, but outside of that as well, talking a little bit about the shift in power between different protocols in the space as we start to see DeFi and enterprise blockchain start to be taken a bit more seriously as applications are starting to flourish on Ethereum. It really is a good question to ask whether or not we can expect this to start happening on other chains as well. And we've also got a big update in regards to DigiFox that I want to share towards the end. But we'll talk about all of this and more right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone. So to start off here, let's go ahead and take a quick look across the board for the market. We can see over the last 24 hours, the vast majority of cryptocurrencies are in a no trend scenario between 1 to 2% to the upside or downside. We have some key market players in double-digit territory such as Decentraland, Band Protocol, Zilliqa, Archon, and Thorchain, as well as Holochain and Ocean Protocol. Again, as we go down the list here, you'll still see a consistency in the trend. We've actually been a bit shocked by this month as so far it seems like the small mid caps are still outpacing the general market right now. We're not seeing that shift so far that we've been calling for in the newsletter and here on the channel for large caps. So we'll see if that actually plays out this month in August. I still do believe we're going to see some of the kind of mid to large sized protocols such as Tezos, Cardano, and a few others, as well as XRP and Litecoin starting to pick up here. But the major thing I want to talk about here is first off Bitcoin. I mean, by now here again, I've emphasized this probably before. This is a very clear confirmation, guys, between the volume and the consistency of 3 weeks of price action beyond this line of resistance. There is no way you can draw this line at this point to signal that Bitcoin's still fighting back against resistance. It's broken through the wedge here, similar to what it did back here in the previous cycle, just over a longer time frame this time around. As we've been talking about, we're going through expanding cycles. Now, again, I don't want to dive too much into the day-to-day. I mean, if I look at the daily chart here for Bitcoin, just to show you guys what I'm seeing right now, the price looks fantastic, even after the crazy flash sell-off that we saw that knocked Bitcoin down over $1,000. I think it was around like a few hundred dollars as well. Taking that into account, though, price is still holding up relatively close to the relative highs. I think I want to talk about here is really looking forward towards institutional adoption. When is that inflection point going to be when institutions actually get involved in crypto? You're going to hear people ramble on and probably give you all types of different theories and, say that it's right around the corner, things of that sort. I don't really want to give a time frame, but more than anything, I want to give you guys a price that is going to drag institutions to leapfrog bounds beyond what they've already currently expected to produce for Bitcoin in regards to institutional products and things of the like. And that is 20K. 20K is the big number here. Now, why is 20,000 a big number for institutional investors and also possibly retail investors? Well, it has to do with one thing. When you reach back up to the all-time highs of an asset like Bitcoin that has very stark corrections, many people see the boom of Bitcoin and then they see the bust, the 80% corrections that historically happen for Bitcoin time and time again. We saw it back here in 2013, downward towards the beginning part of 2015, and over here in the peak of 2017, going down here towards the end of 2018, going into 2019. So with this, a lot of people think Bitcoin failed, this and that. You hear about it during the boom, you don't get involved, and because of that, you see the correction coming, and you're like, oh, see, I knew it. It was a scam, right? But all in all, Bitcoin continues to set these higher lows. People just don't realize it, and inevitably, it comes up and revisits the highs. Now, this was the same exact experience I had back in 2016 when Bitcoin got back above its previous all-time highs. Here in 2016 going into 2017. This was the time period here that I said, well, wait a minute. This is something I need to pay attention to. After the Silk Road, after Mt. Gox, or Magic the Gathering online exchange, once the implosion of that happened, I thought Bitcoin was probably done, right? And I remember it consolidating around $200, and I thought it was just holding on a whim, right? I was trading equities at the time here, and I started to see the higher lows, higher highs, the continuation, this almost kind of V-shaped recovery over a similar time frame to the correction. And you'll notice there's a lot of similarities here. Same general resistance range here. Then we'll set back here. We set the base, right? We started moving higher, right? And we eventually got to those all-time highs, and that's when the vertical rally comes in. And it's going to be the same way here. Now, as we talk about going to 20K, what's going to be the on-ramp, obviously, for institutional capital to get in? I think there's not only going to be a lot of great on-ramps that are already currently here, which are not only more payment processors, but also stable coins and a lot of other tools that are just making the process a lot more simple. But obviously, there are going to be financial instruments. There are going to be ETFs, things of the like, that are going to play a very important role. And one thing that's very important to keep in mind here is that recently, the supposed crypto mom, or Hester Pierce, as she's known, has been voted in to be a part of the SEC until 2025. So this is really, really exciting stuff, guys. Now, again, being one of the commissioners here, Hester has been basically earning the name of Crypto Mom because she's been very pro, not only hopefully pushing for the SEC to implement policies of adoption for cryptocurrencies and in regards to allowing this market to flourish to some degree, but outside of that as well, just treating it like the SEC does other markets, and understanding as well that there are a few nuanced areas in cryptocurrencies where they can't be treated like traditional financial instruments. They can't always be compared to traditional investment classes. And she takes a very almost kind of libertarian approach. I wouldn't want to label her as libertarian, but I got to meet her at Consensus in 2019. And it was funny. I actually found myself debating in favor of more regulation than she did. And I'm very libertarian in a lot of those regards. I want to see markets flourish. I want to see mistakes be made so we can learn from them and then get on to building markets that are efficient. But the thing I basically had chatted with her about was the issue with like wash trading and a lot of the volume in the space, and why there needs to be some kind of regulatory protections, things of that sort. But outside of that, outside of core parts of market manipulation, we actually agreed on a lot. And it was just really cool to see someone who's under the big wing of the SEC speaking in that perspective. It shows that there's a little bit of nuance to the world, that the SEC, much like any other organization, is definitely not perfect, but at the same time, not being perfect has a bunch of people who actually do have good intentions and have differing opinions and probably want to see, the world play out in different ways. So again, I think it's very important to keep that in mind. And when we have people like Hester, continuing to stay on board, I think this is going to be really, really positive. And again, speaking a little bit to time frame here, I think though price is probably the most important. Beyond 20K is when we're going to get definitely more serious discussions of an ETF, as more people realize that the stock to flow model, the higher lows and the higher highs. The key thing to keep in mind here is there was actually a really awesome, good Real Vision interview a while back with the founder of the Spider SPDR ETF for gold, GLD. So GLD is the symbol. It's a paper ETF that allows you to get exposure to the price of gold. And she had actually said back in 2017 that it was probably going to take 5 years. So if you do some simple math there, you can see that we're going in towards 2022, which is our target for the peak of Bitcoin in November of 2022, where we could possibly see some kind of final financial instrument that's going to allow for exposure to this investment class. So what's important to note about that? That's obviously not 2020, and it's not 2021. Give or take, right? We're expecting this 5-year time frame in this case to be optimistic, right? We've already seen that it's very difficult to get these ETFs in. How is this going to play out? Well, the ETF is likely not going to be the major inflow to cryptocurrencies. What we're likely going to see here is that through other means, we're going to get capital in the market, and that the ETF is going to trade as the news, just like the Bitcoin futures did in 2017. If you guys weren't around then, or maybe you don't remember, or possibly some of you might just need some rehashing of the explanation, it's no worries whatsoever. Basically, there was two major futures markets, the CME and the CBOE, and basically these two markets, some of the largest futures markets in the world. And they listed their own forms and iterations, most in a sense of competition, of Bitcoin, building Bitcoin futures contracts. It's a form of derivative. And basically, this was what drove people excited and crazy about Bitcoin. It basically was the key reason why we went from, a measly few $1,000s for Bitcoin all the way up to 20K. right? We took a massive multiple on Bitcoin because of this. And I think the same thing is going to happen here with the ETF. So again, that's my philosophy on it. It's going to take time to get this ETF in, but the discussions and the approval process are going to start to get much more confident as we get into 2021 and beyond 20K as a price. Now, I wanted to go ahead and talk a little bit about this second topic I mentioned at the beginning of the video, which is competing protocols to not only take market share from enterprise blockchain that Ethereum currently owns, but also as well DeFi. I know many of you have been talking about this in the comments of my videos, and I know many of you have asked me to just kind of delve into this a little bit, because it is becoming very apparent here in the current environment. I can tell you guys, I've operated a business on Ethereum, right? We've built a crypto wallet. Many people are saying that ETH 2.0 is not going to be here anytime soon, and it's a question of whether or not Ethereum will be able to scale. It has the network effect. It has all the developers it could ever need. It doesn't have the scalability, though, right now. And that's something to be very fair and realistic about. As you all know, I talk a lot about Ethereum, and I'm very pro DeFi and enterprise blockchain, and we have to be fair in this regard. I'm going to make two fair statements, some that one of you, well, I guess it's one or the other that usually people like. To be fair, Ethereum is the absolute dominant player right now. It is ahead of anyone right now in the sense of actual market adoption and use cases. However, if it cannot scale like other blockchains are looking at scaling right now, then we are going to be in a position where a lot of that Ethereum market dominance can shift to a lot of other players here. Again, I've always held the position of being quite conservative. I like to see it. Right? I like to see, basically, in this case, as a long-term investor, I would like to see some actual examples of DeFi applications on these chains that people are using or feeling inclined to use, or being integrated into applications similar to the application we built for Digifox. But the one thing I want to talk about here is on a trader perspective. Sooner or later here, as we have Shelly coming in for Cardano, as we have all these different network updates coming in for a lot of other blockchains, NEO 3.0 probably around the corner here in the next few months, right? So we keep these things in mind here. There's a lot of trading opportunities. And I like to use my ratios during these times, right? So again, a lot of people were saying that I was a naysayer here on Cardano, for example, that after its phenomenal rally it had, this is a ratio against ADA to Ethereum, so Cardano to Ethereum. So this shows that obviously since back here in April, going up here towards July, that Cardano was outpacing Ethereum. And when we got up to this historic line of resistance, a lot of people were bashing and said, no, Nick, you're just being bearish on Cardano, this and that. When in reality, I actually never spoke negatively about Cardano. I interviewed Charles Hoskinson a while ago on my channel, and I'm interested to see, I like the philosophical approach and the peer-reviewed scientific kind of approach to how Cardano is building what they're building. But at the same time, as a trader, I'm not biased, right? I go off what history shows us. And thank God we were long Ethereum during this time rather than other protocols. I've been holding a nice long-term position in Ethereum as well as altcoins that are built on top of Ethereum. And it's been going well. But at the same time, now that we've had this pullback here, I like to look for certain zones where Cardano might be a more favorable play. Ethereum has definitely had a nice rally here. Is it likely going to see a short-term pullback here soon? Maybe. Maybe it just consolidates sideways. And that's the key thing to understand about ratios. We're looking to basically be in whatever is moving or leading the market here. And if Ethereum is one of the leading plays, we want to see how Cardano and other assets interact with it. And if we can get, for example, the ratio down to levels that we've seen historically here, for example, maybe around 30,000 on the ratio down to 28,000, right? We've seen support here. I'll go ahead and zoom in so you guys can see it. The red line here, the red dotted line is where price is right now. So imagining that we might get it down here somewhere. Like we tested multiple times. This was previous resistance. It was made new support on the ratio, and then it broke, right? And then we started to treat that previous support as resistance again, and then we broke above it, right? Made it support. So this is a very key level here, right? This range down here we're getting into might be a level where we can get excited about ADA. It's had a nice pullback here. This as a trader is what you want to look for here. And you can take a look at the price to understand how this has played out. Ethereum broke out of its ascending triangle here, right? Broke past the short-term line of resistance, broke out of the ascending triangle here, which is a bullish pattern. And Cardano has been having a healthy pullback after a crazy run-up from 430 sats up towards around 1,600 sats, right? So this is just logical. It's just what we have to keep in mind, guys. After making, in this case, a 400% leap up here for Cardano, that's understandable to see this. So that's the philosophy we need to keep in mind here. Lots of exciting things going on, guys. One thing I want to share with you all real quick before we sign off on the video is just to give you all an update on Digifox. Things are really going good with the startup so far. Right now, we have currently around, last time I checked, around 6,500 users on the wallet, which is incredibly exciting for me personally, just to see people using the wallet, earning interest, a few $100,000 in assets on the wallet. We've raised over $404,000 in our WeFunder campaign, and what's nice is that anyone can participate in this. Just to share with you guys, there's a list here of different articles and news updates. We post bi-weekly updates here so you can keep up to date with what's going on at Digifox as a company. But we'd really love to consider if you guys would like to invest in us here. Again, valuation's still the exact same. So even as the company is growing, we have real growth, real revenue now, and have actual deposits and assets and trades being done on the platform. And it's the same valuation as it was on day one. So in that case, there's a good opportunity here maybe for someone who might want to invest. Again, you have to determine it for yourself. It's not financial advice, and I'm a bit biased because I'm obviously the founder of the company. But if you guys want to figure it out, I'll leave a link down below in the description so you can support what we're doing at Digifox. And if you have any questions, feel free to leave it on WeFunder or in the comments down below here on the channel. All right, so that's it for the video, everyone. Thank you all so much for watching. I hope you are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.